and then this whole thing gets exposed by CZ, but really the market needed to know this stuff. So that's where we are now, and I know we're going to have a lot of questions about knock-on effects of that. So I am very focused on crypto right now, as I am the macro cycle, because they've met at the important part, which is the bottom of the liquidity cycle and right on that secular uptrend of whether it's the 2 standard deviations oversold in the log regression channel of Bitcoin or whatever thing you want to use to show that we're there now. Now, that doesn't mean I'm saying the price needs to have entirely bottomed. I think actually ETH bottomed in June, but I don't know yet. Could it have a further spike back down to 1,000? I don't think it takes out the 700 and whatever low that we had, but let's wait and see. So, okay, I'm going to start asking some questions. Firstly, from the pro macro community and pro crypto, sorry. So from Bumbu, who I speak to quite a lot on the Discord, his question is, FTX Alameda failure is on everybody's mind. The contagion does not seem to be contained. What other failures and market adjustments could we expect? How much longer could this take to play out? I have a slightly variant view, but you can't have much confidence. I think most of the bad leverage was taken out. Please don't use yield. Staking yield is fine as long as you understand that your risk is the currency that you're staking in, which is Ethereum or Solana or whatever it is. That moves up and down. You're going to make or lose money according to that. But the yield is relatively safe because it's written into a smart contract. Yield otherwise, I don't like. I don't take it. I don't use it. Same with leverage. I don't like leverage. If you're going to use leverage, and people will come to me and say, well, you said you were leveraged long in Ethereum. I used call options that had 5% of my capital at risk, and I got a wrong bet, and I lost that 5% in the call options. Totally defined risk. So it's defined risk taking, and options are great for leverage like that. They're not easily available in crypto. Foreigners can use things like Deribit. Now, LedgerX, which was the US version, is all tied up in this bloody Sam Bankman-Fried mess. So I don't even know how that's going to work. And that's another issue for the hedge fund market. There's no option market unless you can trade offshore. So it's really complicated out there. But let's wait and see. But don't use leverage. If you do, use call options, but you still have a risk the exchange goes under and you might not get paid back even if you win. So just be careful with this stuff. Don't risk your life on it. And don't use yield. Gladiator Conan, what will have to happen in order for Bitcoin and Ethereum to basically die? Which is a slightly bizarre question. I don't think they can die. Can interest die over time so you end up with a smaller pool of users? Well, we haven't seen much evidence of that. If I look at the Metcalfe's law models, these networks haven't really grown a lot since 2021, maybe even the end of 2020. And that's to be expected. But for them to die, we need all of Web3 to stop developing and the exponential trend of adoption to entirely stop. And I think that's just highly unlikely. So I just don't see it. Okay, so I'm going to get rid of those questions now. So that's the Pro Crypto members. Time for a sip of wine. It's actually drying my mouth out, so I've got some water as well. Okay. Questions. I'm going to go back in the feed a bit. Some guy G. 20,000, 20K ETH bro. So this is the usual dick behavior that you want to get by point scorers on YouTube and Twitter. Is like, I bought call options thinking that, and so several exchanges do. So don't assume every exchange is terrible. We've seen it in financial markets. Not every bank is terrible. Not every brokerage house is terrible. But Christ, we've seen banks and brokerage houses go bust. We've seen hedge funds go bust. Not every hedge fund is terrible. So don't throw the baby out with the bathwater. Just realize that in FTX, there was bad management and fraud. And that deserved to go under. It did not deserve to take people's money with it. And it's horrific. And as I said, I got caught out in MF Global in the futures brokers market with something like that too. Alex Humphreys, simple question, Raoul. What the fuck's going on? Liquidity is being drawn out of all financial markets. Anybody swimming naked will be shown up as the tide goes out. It's as simple as that. It's as old as the leverage cycle. Humans love sex and they love leverage almost equally. It's ridiculous, but that's what they do. Even though crypto has Bitcoin itself performs at about 140, 50% a year through the cycles. And yet people still want to take leverage on that because they think it's not enough money. It's ludicrous, but I can't help it. It's a degen market. And I also understand that people want to do something with YOLOing because people are disadvantaged in the financial world. They can't get access to products and markets, and crypto gives them access to like early stage VC style technology investments that have exponential upside. I really understand. I really like Solana, and I understand that the chain breaks. I also understand that they're fixing it. I also understand that's a known. And one of the elements was it was concentrated in its ownership because of FTX. They are now having to liquidate it. And so you're getting rid of one of the issues. Solana itself, I think, is doing something very clever. In cryptocurrencies, what matters is narrative. Bitcoin narrative, digital gold, for example. Ethereum, the internet, the distributed internet for Web3. So where do these other chains fit in? Well, Solana has and is building a narrative, which is it's the consumer chain. And yes, there's some others doing that. Flow, I think, is another example, much smaller. But the consumer internet, these are the people who've done the deal with Meta, doing deals with Google. They've got stores, they've got clothing lines, they have a consumer feel to it. And I believe consumer adoption, not at owning cryptocurrencies, but the use of NFTs and other digital assets is only going to explode over the next few years. We've just seen Nike building out more. We've seen Adidas. We've seen the fashion brands. We've seen Ticketmaster. We've seen so many people. Jackie Cornell, thoughts on Nexo? I don't know. I've interviewed them. Sound like they got good risk management, but I'm not a yield guy, so it's not something for me. If you want yields, then by all means check them out, but I don't know. Now, to be fair, they're a sponsor of Real Vision, but again, I'm not a yield guy, so it's not for me to do. I just don't like doing yield. That's no dispersion on them. As I said, I've interviewed them. It's on YouTube. You can check it out, make your own decisions. Sean Griffith, thoughts on Tezos? I'm not really focused on Tezos. The person I know that is Mark Cahodas, who some reason wants to pick on me on Twitter, but I'll ignore that because I like Mark. And I will say that Tezos has some great elements about it, and the fact of how it's dealt with on a legal structure, I think, is an advantage. But at a basic level, I hear a lot of people love the Tezos NFT market because it feels a bit more punk and a bit more wild and a bit freer, and I think that's interesting. So I've nothing wrong to say about Tezos. I don't own any interesting project. Generally, wait and see. They haven't got mass adoption yet, so again, doesn't fit my Metcalfe's law thing.